Peggy, thank you so much for joining us today on Facebook Live.
Thank you for inviting me. I'm excited.
I am too. So we've known each other for a few years now,
I
and
think so. Yeah.
I absolutely love everything you guys do. And you are, without a doubt, if there's ever any question about the intersection of Clio and accounting, I don't think there's anybody who knows the answers better than you do. But before we really get going, can I read your bio really fast?
Please do. Yeah.
Okay, so this is Peggy Krunke, and I'm just going to read it. With over 30 years combined experience in the legal environment, entrepreneur, business owner, and an IT consultant, Peggy has combined her experiences to bring results and competitive advantage to law firms, assisting solo and small firm attorneys across the country in managing their businesses by providing law practice management consulting, bookkeeping services, client invoicing, cash flow analysis, and being there as a sounding board as they grow their businesses. That's so important. Okay. Peggy, you and your husband, Chris, started CPN Legal in 2012. So we're 9 years in, recognizing the growing need for these services in the legal community across the country. You specialize in law firm accounting and bookkeeping, Clio Grow, Clio Manage, and QuickBooks integration, and creating efficient workflows to improve cash flow. CPN Legal produces positive outcomes for small law firms in the areas of financial reporting, cleanup, QuickBooks, invoicing, creating budgets, trust compliance, dealing with taxing authorities, vendor relations, collections issues, and QuickBooks setup.
Okay. That's a lot.
Hey, that is a lot. All right, so here's what I want to tell everybody at the very beginning. This is like the coolest thing about you. So first of all, you talk about 30 years of experience in the legal industry. You've done some incredible things. Like right before we went live, you were talking about, oh yeah, when I used to do the ABA tech show. Like
Yeah.
you've done some really cool things. And as a
Yeah.
result, you know like everybody in the legal industry.
It's interesting how like you say that, and I take it for granted, I think. But I started out really when my legal career started, I was a director at a local bar association, the Cincinnati Bar Association, and that's really where I really got involved, really deep into the legal environment in the legal community. And even as a director at the Bar Association, I was involved with bar associations all across the country, helping them with that was a group called NABI, National Association of Bar Executives. So we did a lot with bar association people, which also you tend to meet other lawyers through those relationships too. And in that role, I really got involved with the ABA, and I spoke at like 3 legal tech shows, which was pretty amazing actually.
Yeah, that's
Yeah, that
kind of
was
the
really
big
kind of
time,
cool.
Peggy.
It was, I didn't realize it at the time, but I had great people I was presenting with and great people to support me. And it was such a neat event to be part of. So, yeah.
Well, and every time we chat, I'll be like, well, you are the first person I call whenever I need to know about somebody because chances are pretty darn high that you know them. Though recently, I actually found someone you didn't know.
You
But
did. Yes.
I love it because like the first time I talked to you, I said something about Clio and you're like, blah, 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 the owner and blah, blah, blah. And then I said something about Rocket Matter and you're like, yeah, and this person. And I'm like, oh my gosh, she knows
Clio, it's fun. I've been with Clio pretty much since day one. As soon as they started up their consulting program, they're about 11 years old now, I think, Clio. They may be going on 12 at this point. So I've been with Clio for about 9 or 10 years and was one of their first consultants. So it's been kind of fun to grow up with the product and watch it evolve, right? And I used to do a lot of blog writing for them right when they were just starting out. Of course, now Jack has a whole team to do all that kind of stuff. But really, and now what's really cool is because we get to be part of the development team sometimes, testing the
everybody.
products for them.
Yeah,
Yeah,
that was what
especially
I
on the
really wanted to talk about. Like, I love
yeah.
that you do that.
So especially on the QuickBooks integration stuff, we'll be a sounding board for them as they're starting to talk about developing a new integration and having us test it and be part of the beta test on it. So that's really valuable to be part of.
Well, and I think what it gives your clients is such a deep knowledge of the product. Like you're able to go in, eh, when I first talked to you, you're like, we do Clio, end
Yeah.
of sentence, end of paragraph, end of discussion. Like you are Clio. And you're like, we can't know in depth all the software that's out there. And so you concentrate on Clio and you know it so well, and you bring such a wealth of knowledge to your clients.
It's funny you say that because I learned that early on. Because when I first started, when I left it, I actually managed law firms for about 6 years too. So I managed a couple law firms. And then when I finally went out on my own and started getting involved in all the cloud-based products, I was looking at getting certified in Rocket Matter and in my case, and Action Step. And I quickly realized I have to be a master at one thing. And there was a guy, I remember having a conversation with him and having the same conversation with him. Where do you want to really hang your hat? And it was Clio, and it was a good choice for me. But I can't be good at everything, but I can be really great at one thing. And it
Yeah.
was Clio. Yeah.
And you are really great. So,
Yeah.
in fact, you're so great that I'm so excited you're coming to teach a Clio class to
I
my
know. That was a
team.
great suggestion. I was talking to Pam about that. Yeah. Um, I think I'll be able to I think what I'll like about it is they're going to be able to bring a lot of questions to me of things they're seeing and getting asked, and really dig into deeper into what they need out of it. Clio has great training tools. I mean, Clio in itself has a great support system and a great um, tool, of training, but I know law firms because I live in them so often and I'm in there
Yeah.
all day working in law firms. So I have a whole totally different perspective on what they're going to need when they get Clio set up.
Well, and you come from the financial side,
Yeah.
which makes so much sense, which is where we're coming from. The Clio comes from it. The Clio training is from the law firm side,
Yeah.
which is what it should be
Yeah.
because that's their
And,
user.
yeah, that's true. But the other thing about the financial side with Clio is there's a lot of financial data in Clio.
Mhm.
Okay. But it's not, there's not a lot of canned reports to get out what you need. You really have to know how to export to Excel. And that's, my husband's a great Excel programmer.
Oh gosh,
Loves,
no kidding. He's done
yeah, he
some
writes a lot of
fabulous work.
macros. So
Yeah.
getting the data, knowing how to get all that great data they're collecting out of Clio, and then using that with the QuickBooks data is really where we can help develop some good reports, because it's not going to all be in QuickBooks and it's not all going to be in Clio, just by the nature of the two systems.
Right.
They're two entities. They do speak well together, but the data is stored in one place versus another place when you're
Yeah.
working with Clio and QuickBooks. And I don't like that to scare people off, because it's simple. It's simple. And the lawyers are going to live in Clio all day anyway. Really, very rarely are they in QuickBooks.
Yeah.
That's the bookkeeper's job. Um, but helping them understand what data they can get out of there, as long as we got good data going into it, and that gets back to setting things up. How do you set up Clio to meet your unique business needs for your law firm so that you can get the data out of there that you need? And we work with your clients a lot on that.
Yeah, because I think that most law firms, when they get new software, they've gotten it for a particular thing. So probably to
Yeah.
manage their cases and calendaring and stuff like that. And they set it up as almost like they set up their paper files a lot of times.
Yeah.
It's
It's flat.
it,
It's flat.
it doesn't
Yeah.
they don't think about the data that they're going to want and the data they're going to want to get out of it and how they're going to use it, and then bring that back to, okay, this is how you set it up.
Yeah. That's a great point, Brooke. Actually, in my first career as an IT consultant, I was a database programmer. So understanding how databases are designed, and that my husband is too, that's where we come from, the IT part of it is in helping them understand and collect, and where do you put the data in Clio? Where does it
Mhm.
make the best sense to store this data? Is it at a client level field, or is it a matter level field? Where can we store it so that we can get it out in the
Right.
best way?
And
Yeah,
is it a tag or is it a custom field? Is it like
right.
there's all kinds of all
Yeah,
kinds of
unfortunately, Clio doesn't have tags yet. They have tags in Clio Grow. Clio
they've
Grow
oh
uses
okay.
tags, but we're trying to work with getting those tags now brought over into Clio
Oh,
Manage.
Clio.
So I'm assuming that's going to be on the horizon very soon. So yeah.
Well, I feel sure if you're whispering in their ear, it will happen. All right, let's change topics a little bit.
Okay.
So it is 2021. 2020 is in our rearview mirror.
Yeah.
What are the big lessons that were learned last year, in your opinion?
I I love this topic, okay, because there were some big ones learned. Um, First of all, it's obviously all started with the PPP loans,
Hmm.
okay? And what happened is our business exploded in March and April. And the explosion, all of our clients we had, when they were ready for their PPP applications, it was fine. We had all the data they needed. We could pull their payroll reports. We could pull a P&L. We could pull the balance sheet. Everything was there. Okay. It was really simple. But they were talking to their friends, lawyer friends, and they're like, they didn't have anything. They didn't have QuickBooks. They didn't have, or they haven't reconciled anything, right? So nothing was current. Um, so that was one of our biggest lessons is be prepared. You'll never know when this is going to happen. And I think that a lot of small law firms are taking that lesson to heart is you have got to have good financials in place because you never know what's going to be down the road. Um, the other thing is banking relationships. We saw a lot of issues come up with the PPP loans going through different banks, right? And they realized they didn't have a good relationship manager at their bank to go to. Now, a lot of our small clients did. They had somebody at the bank that they could call up. But the ones that didn't, boy, getting that PPP loan was a little bit rougher. And I think we saw a lot of people change banks actually as
Yeah,
a
we had
outcome of
a
this,
number
right?
of our clients change banks for that reason
Right. Yeah.
because like I'm like, who's your banker? They're like, I don't know. I'm with Wells Fargo, Bank of America, Chase. I'm like,
Yeah. Yeah.
okay.
Yeah. So that was huge. So those lessons learned was, have your financials in order, get your QuickBooks set up, get everything reconciled so you're ready for the next one, and then have a good banking relationship with your banker. Yeah, and I won't, I don't want to downgrade Chase and Wells Fargo too much because some
They've
of them
got some
did
great
actually
products
have,
out there.
they did, and some of the loans actually worked. Um,
They really
no,
did. You know, I think the problem was at a smaller bank, you know your banker and you can call.
yeah,
And
yeah,
your banker says, here's where we are. They're trying to get the tech ready. We're going to open in probably a week. And you're like,
yeah,
okay, I'm not going to get forgotten. And at those big banks, you don't have that personal relationship as often. And so,
yeah. We switched banks. We ended up switching banks because of it for
oh,
our
really?
business. Yeah, we went with a smaller local bank. They actually didn't get the PPP loan for us, but another bank did. But we were so frustrated with dealing with the other bank that we had to switch. Yeah. So those are
Yeah.
two of my bigger lessons learned.
So can
Is
I add a lesson to that?
sure.
Because I like you're kind of overarching was be prepared. Um, so often I talk about how much cash a firm should have
Mhm.
access to, not actual cash, but that they should have 3 months, they should have access to 3 months of operating expenses. And boy, howdy, the clients that had either that had, basically a savings account, they had some cash, and the ones that had lines of credit so that they had access to 1, 2, 3 months,
Yeah.
they were in a way different frame of mind last March,
Yeah.
April, May than the people who didn't have any kind of cash cushion.
And to top that off, that's a great point. I'll tell you the other thing we saw and we had a lot of clients that didn't get hurt really badly by COVID. We had a
Mhm.
handful that did. Okay, and But the ones that were really successful through this were the ones that had been in the habit of doing two things: billing bi-monthly, billing twice a month,
Hmm.
and having retainers. Okay. So for the first, if you think about that, right? If COVID hits in the first 6 weeks, if they have been in the habit of getting retainers from their clients, they've got a built-in bank of money, right,
Yeah,
for billing. So that was really
absolutely.
big. And then as a result of that practice, now we're seeing a lot. You're probably seeing the same thing. A lot more law firms really taking to heart getting retainers, using the evergreen retainers, getting
Hmm.
your fee agreements rewritten to
Yep.
accommodate all this, right?
We're
And
rewriting a
billing,
lot of fee agreements right now.
I bet you are, yeah. And then also making sure that they're billing bi-weekly or twice a month or whatever, so
Yeah.
that they can get the cash flow in. But yeah, yeah, good point. Yes, so
So,
the retainer agreements need to be rewritten if you're going to take, um, if you're going to be using retainers and you're going to want to use evergreen retainers.
yeah. So when we talk about improving your collection rates, we say it's a puzzle. We say there are 5 pieces. So the first is that initial retainer, which should be equal to the first 3 months of work, right? Because you're going to
Mhm.
bill, you're going to work month one, and then you're going to send the bill at the beginning of month two. And I don't care what your bill says, clients think they have 30 days to pay. So you bill all through month two, the beginning of month three, your client just thinks the bill is due, that
Right.
first one you sent. So like then you start to go into collection mode. So it takes 3 months to figure out if the client's going to pay your bills or not.
Yeah.
The second one is that evergreen retainer you're talking about. So
Yeah.
it should be equal to 3 months of average work, which is probably lower than the first 3 months.
It should be, you would think. Yeah.
I mean, generally. And 3 months for the same reason. And people are so funny. They always ask me, they're like, Brooke, clients already proven they're going to pay. And Peggy, back me up on this. A
Yeah.
client can quit paying at any time for any reason, and
Anytime.
it rarely has anything to do with the
Yeah.
attorney.
And you don't know what's happening in their lives.
Yeah,
You know, you have no idea what's happening there. All the only thing you're in control of is what you're in control of.
that's right.
And you're in
And it's,
control of making sure that those retainers are coming in and getting paid. And if you're not getting paid for the retainers, you have to somehow figure out how to stop working,
yeah.
which is
So
hard. I know that's
that's
hard.
that's the next point. Have a stop work policy.
Yeah. Yeah.
Whatever it is, have it and really use it. And it doesn't have to be high tech. It doesn't have to be difficult. There was a firm in the Pacific Northwest. They went to Office Depot and bought a $2 box of red rubber bands, and they would throw a red rubber band around any file that you couldn't work on.
Nice. Yeah.
Yeah. And now, like Clio will let you lock that file so that people can't get to it. You just
Yeah.
don't let them access it.
Or put it in a state so that they know that it can't be used, or
Yeah.
have whiteboards up around the office, or in Teams messages or Teams board or something, so people know not to be
Yeah.
working on that
These
case.
are no clients. Um,
Yeah.
the fourth piece of the puzzle is accepting credit cards and having a
Yes.
credit card agreement, because
Yeah.
you're big on this too, aren't you?
Oh, big time. Yeah. Yeah. And the credit card agreement has to be part of it doesn't have to be part of the fee agreement. It has to be an accompanying document. So we actually did get the credit card authorization forms, right? That
Yeah.
allow the firm to auto run their credit card when their
Mhm.
minimum retainer balances. And can I bring this up 1 second for you?
Yeah.
One of the reasons I love Clio so much is this whole concept inside of Clio. You can set a minimum retainer balance. Okay. And
Yeah.
then inside of Clio, so we do this as part of our billing run. After we do in billing and we're ready to replenish retainers, there's a great report in Clio called the Trust Management Report. And you can run that and it tells you everybody that's below their minimum balance, as long as they were set up correctly. So
That's
you remember
awesome.
the good data, having the matter set up correctly. So
Yeah.
you know exactly how much to now replenish the retainer for. But having
Yeah.
those credit card authorization forms are key. And I'll tell you what, before you get to number 5, is your all this stuff has to be in your fee agreement, but you can't
That is number
assume.
5.
Oh my God, you're kidding me.
You have to have a fee agreement. The state bar wants
Yes.
you to have a fee agreement.
Yeah.
So
Yeah.
as long as you're writing a contract, let's write a contract
Yeah.
that that
Yeah.
is advantageous.
And don't assume they're going to read it.
Oh God, they're not going to read
Okay.
it.
So here's the problem I'm seeing lately is all this electronic signature stuff, right? Everything, send it out and they sign it and it comes back. Well, they're not reading it, right? You still have to have a conversation with them about this fee agreement that goes over these really important billing sections. Okay. They have no idea what a trust account is.
Right.
They don't know what a minimum trust balance means to them. So this language is new to them. So
Mhm.
don't assume that just because they electronically signed, it might be worth saying, did you read that section about getting paid for our work? So
Well, and I think one of the things I say all the time is that AR is created the first time you meet a client.
yeah.
It's created in the sales call, and it's created by not setting and communicating expectations. And
Oh
that's
yeah.
exactly what you're talking about.
Yep.
So, you have to have the policies and the procedures to back it up. But if the client doesn't know, and if you haven't set the client's expectation that you are going to be paid every month, so most of our clients get paid on the 10th,
Okay.
right? They send the
Yeah.
bill out on the 1st, the client, or on the 11th. The client has 10 days to dispute the bill. On the 11th day, they're authorized to charge the card. Like, if they don't know that, if they don't understand that, that's where you're going to start getting into
Yeah.
trouble. So I think you're right. Set that
I think
expectation
set
verbally.
the, because if you don't set the expectation, the client's going to set the expectation. And then you just turned over control of the whole deal to the client instead of you, where you want to maintain your control. And on those credit card authorization forms, I know I have a lot of new clients that kind of balk at it and like,
Mhm.
we're not allowed to do that. You're not allowed to do that. Our state bar won't let us do that.
Yes, they
And I said,
will.
pretty much if it's in your fee agreement, you can pretty much put whatever in there you want, right? And we do a lot of invoicing for clients. Like going back to those twice a month invoicing process, we
Mhm.
do a lot of invoicing for clients. And we very rarely get pushback when we auto charge the cards.
Oh,
Okay.
yeah. That's
Yeah,
really
very
rare.
rarely. Every once in a while, we might get somebody that says, hey, what's this going on? Why'd you charge my card? And then they just refer to the fee agreement
Yep.
and say,
The
well, it's right
agreement, there
here
it is.
where we agreed to it. So, yeah.
Yeah. Yes. Well, the other pushback I get from attorneys is I don't want it to all go on a credit card because I don't want to pay the 3%.
Yeah.
And you and I have talked about this. So maybe you can get this answer. So the
Okay.
2020 Legal Trends Report said the average US collection rate was 86% for law firms.
It's pretty good.
And I think you and I have talked about that. That seems pretty darn high. What did they put like contingency firms in there? Because contingency firms always get paid.
Yeah.
I don't understand. Because you and I have talked, and I think it's closer to 75 or 80%.
Yeah. That's a high number. I felt like that's a little bit high.
Yeah, that's a little
Um,
high.
yeah.
So
So go
when
ahead.
it well, when attorneys come to me and say, I don't want to pay the 3%, I'm like, really? Because if I can raise your collection rate from 75 to 85, which is an interim step for us, we feel like it should
Hmm.
be 90 plus, which my guess is most of your clients are at that 90 plus. Like, what's 3%? If I can get you 10, 12, 14%,
Yeah.
why are you complaining about giving up the 3?
Yeah. It's just the cost of doing business.
It
Okay,
really
think of
is.
and especially during COVID, because what we found obviously in COVID, the U.S. mail was slower than crap, and then no one could get to their office to pick up the checks that were sitting there. Then we're getting ready to send out new bills, and the client's like, "Wait a minute, I sent a check for that, right?" And
Yeah.
then you email the lawyer, and like, "Oh, it's downtown at the office. I haven't got to the office." So this whole delay in getting checks processed and into the bank was really quite large. The other thing I want to say
And
about
really kind of
the
unfair to the client.
I just didn't sit well. I mean, they paid and then we're not showing that they paid, right?
Yeah.
That's not good. But on the fees, I have a handful of clients that actually charge the client for they call it a convenience credit card fee. And
Hmm.
so they're turning around and charging the client the 2.8 to 3% if they pay with a credit card.
Yeah.
Um, and I will tell you, can I throw something out real fast?
Yeah.
There's a new legal payment processor system called Gravity Legal that has a really cool, one of their cool features of Gravity Legal. You should check them out. I know the guys that created, I've been friends with them since the legal tech shows. Um,
Because Peggy knows everybody.
yeah. Um, but they have a feature where you can build in the fee, the convenience fee into the charge. So when they get
Oh,
the link to make the payment, and say it's a $3,000 payment that's coming through, Gravity Legal's coded it such that if you've set the flag to charge the client for the convenience fee, it
mhm.
automatically adds the convenience fee for you, um, which is really cool.
That is awesome. Okay, so I'm
Yeah,
surprised that you were talking about Gravity Legal because Clio has that great integration or that newish
yeah,
integration with LawPay.
right, right. There's a couple things I don't like about it.
Okay.
One of the things we don't like about it is when you use the Clio payment feature and you're sending your link to make a payment to the client, they don't have the option of doing an e-check versus a credit card. Okay. It's
Really?
always only credit card. Yeah. Yeah. So if you're using that Clio payment integration, the client only has one choice, and that's to pay with credit card. Now, grant you, it makes life really simple when you're sending out your bills, right? To just share
Mhm.
them and then have the payments come in. But for the e-check fees are only $2 per transaction. And you're
Yeah.
talking about a $3,000 bill. That's a big difference, right?
Yeah.
So, so Gravity Legal actually has a really cool process where you can actually only send the client the ACH link. So they don't even see the credit card.
They don't have an
Okay.
option.
They don't have that option. And so LawPay doesn't have that yet. LawPay still allows the client to make that choice.
Mhm.
When you send the link out, not the Clio way, if you just
Right.
send the LawPay link out as
Right.
a
So
LawPay link,
you've got Clio
yeah,
that's credit card only. If you send it directly through LawPay, it's credit card or e-check.
right,
And with Gravity
yeah,
Legal, you can choose
yes.
whether to give them which options to let them have.
Yeah, exactly. So I have a couple clients that switched over to Gravity Legal. Now they do integrate with Clio, but they integrate a different way.
Mhm.
Um, but to them it was valuable choice because they wanted to eliminate the high cost of the credit card fees.
Mhm.
Yeah.
Awesome.
So new players out there.
I and you're on top of it, man. You always are.
Yeah.
Um, all right. So let's change direction again. Are you okay with
Okay.
that? Um, what are the biggest mistakes you see when you're working with new clients?
It's a great one. Um, I think I think one of the biggest things we see is errors in trust accounts. Okay. And the errors come because they hire a bookkeeper that doesn't understand law firm businesses. Okay. They don't understand the concept of a trust bank account and trust liability accounts and what can be where. So that's usually when we take on a new client. That's the first place I look when I get in their QuickBooks is look at their trust bank. I do. So we look at the trust account register because I can look at it right away and tell you if things have been coded wrong. Like like you can't code expenses to a bank trust account, like credit card fees. That's an expense that's only allowed to be on on a P&L, right?
Yeah,
Okay,
that's your bar license right there.
exactly. So you can't charge. I see advertising in there. I'll see referral fee. I said, oh my God, you guys, this is a mess. Um, so we do that, and then we always do what's called a trust three-way match report
Mhm.
when we take on a new client because we want to see how messed up their trust accounts are. Um, and the trust three-way match is a process where we go through and make sure, verify that the trust bank account equals the trust liability account total, which equals your client ledgers, which are for our clients, we keep the client ledgers in Clio,
And Clio.
right? So it's a three-legged stool. And I don't think we've ever had a client, unless they were brand new, come aboard that actually had a three-way trust report work. We were
So,
always wrong.
all right, so let's do a quick thing for all you attorneys out there who are going, "Oh my God, is this a mess?" I think the first step is to pull your balance sheet
Hmm.
and look at your trust bank account and see if it has the same balance as your trust liability.
Perfect. Yes.
Like
And remember,
that's
yeah,
level one. And
that's
if
number
that doesn't
one.
work, it,
Yeah.
it's probably really not going to match what's in Clio.
Yeah. Sometimes we see the liabilities match the bank statement and the Clio's off. Okay, that just means, and usually that happens because of migrations. And when they
Hmm.
did the migration, they just brought over the data into Clio incorrectly. So it's a matter of cleaning up Clio
Old
first.
stuff. Yeah.
Yeah, yeah. And the other thing is, even with the liability accounts, I know that the banks charge those bank fees, and they're supposed to be in and out, right? And
Hmm.
sometimes the in and out happens in the same month, so it's a net zero. Sometimes the in and out process months, so you still
Yeah.
have to account for that, because that will be, if your bank account doesn't match your liability account, it could be because of those bank fees
Right.
lapping over months.
It
Yeah,
could be that interest amount
yeah,
that,
yeah. And we have a very unique way of categorizing that so that it stays on the balance sheet. It's a separate sub account of the
oh,
liability account. Yeah,
that's really nice. Because I will say, like, that interest, when I was running my family's law firm, the interest would go in January, and then it would get sucked out by the bar in February. So
right,
I would look at my balance sheet and it was always off by the amount of the interest.
right. So you always want to account for that. Yeah.
Yeah.
The other thing we see is the chart of accounts. Okay, so this
Oh,
is this is one of my huge pet peeves because I'm
yeah.
very organized. But chart of accounts have to be set up to tell the right story of the firm,
Okay. Well,
right?
wait, let's back up to
Yeah.
what the chart of accounts is.
Okay. So the chart of accounts is a way of categorizing income, expenses, assets, and your liabilities, right?
So it is when you look at any financial report, any named category is an entry on your chart of accounts. It is an account
Yes.
in your chart of accounts. Okay.
And it's associated with a type. And this gets into a little bit of the weeds, but you talked about your balance sheet, right? On your balance sheet, you only have asset accounts, liability accounts, and equity accounts.
All right. So
That's where
now I have to do
yeah.
my balance sheet thing.
Okay, go for it.
All right. So assets are things you own, like a
Yep.
bank account or a car. Liabilities are things you owe. So it is the the uh not the lease, I like the loan on that car, right?
Yep.
And equity accounts are what's left over. Assets minus liabilities, things you own minus things you owe equals your net worth. Just like with your house, right? When you talk about the
Yeah.
equity in your house, it's the market value of your house minus what you owe on that mortgage gives you equity. So think about your balance sheet the same way.
Yeah.
Things you own minus things you owe equals your net worth. Okay, now I've done my
And
spiel.
perfect. And I want to bring up another point because 2020 brought up a whole new thing on balance sheets. Because all of a sudden now we got couple new categories to add, like EIDL loans or
Uh-huh.
grants. EIDL grants, which were never intended to be paid off, and they were
Right.
on the liability, they're on the balance sheet as a liability. The EIDL loans, which do have to be paid back, right? The big ones, those have to be on there as a long-term liability. And then
Mhm.
we had the PPP loans, okay, which when they get forgiven, need to get removed off your balance sheet and put on your income, put on your P&L. We're putting them in other income at the bottom of it, so it's isolated.
Yeah.
But you had, so those were new. All of a sudden, you had new accounts you had to have on your balance sheet, right?
Yeah.
So that was kind of new. So getting back to, I forget where we're at, talking
We
about
were talking about
expenses.
chart of accounts and your pet
Chart of
peeves.
accounts, thank you. So then the other thing about chart of accounts, which is the more interesting one, is the profit and loss report, right? So the
Mhm.
profit and loss report is where you're going to categorize your income. And we have a lot of firms that like to break out their income by practice area, for example, on
Mhm.
their P&L, so they know where most of their income's coming from.
Mhm.
We also have a category called we call it billable expense income. That's
Yep.
income you got back from expenses you had paid, but the firm had paid, right? So that's
Right.
money you put out that you're now getting back. So we separate that out
So
from
it's
fee
filing
income.
fees, it's stuff like
Exactly.
that.
Expert witnesses and things like that.
Mhm.
And then in the middle of the the P&L, this can also be on the balance sheet, is the actual expenses you paid on cases on behalf of the client. We call those cost of goods sold. And this was another terminology that was on the PPP loan application. Laura's like,
Mhm.
I don't have a cost of goods sold. I said, well, actually, you do. That's what you've paid on those are expenses you paid for your client that you expect to get reimbursed for.
Mhm.
Okay. Now those can be on the balance sheet too as advanced client costs.
Well, I
But
was going to
then,
say that was you kind of skipped over that. There are two ways.
yeah,
There's really three ways to treat those costs. You can do what you said with the income and the cost of goods sold. You could do it, um, when you get repaid, it's income, and you just leave the expense and down further instead of in
right,
cost of goods sold down
right,
further on your P&L. Or you can have it never touch your P&L at all and have it show as a loan to the clients on your balance sheet,
yeah,
which is an asset, right?
assets.
Because
It
you own
is,
that,
yeah,
and
yeah.
and have it sit there.
I actually, I prefer the advanced that I prefer having them on the balance sheet when we're
I
dealing
do
with
too.
firms that are big personal injury, a lot of contingent cases, firms that are really putting out a lot of money. If we just have a lot of firms that are doing filing fees and smaller things, a lot of them like to see it on their balance sheet, to be honest with you. They like to see the in and the out. But when you're talking about a lot of sums of money, we really want to keep them on the balance sheet.
Yeah,
Um,
I
and
agree.
then the other part of the P&L is the all your expenses, and get back to your chart of account, right? How do you categorize and break down expenses so that you know exactly where you're spending money on, right? So
Okay,
you,
can I say
yeah,
this? The
yeah,
answer is not alphabetically.
yeah. No, we're
Talk
actually
about a
we're a
pet
big,
peeve. That's one of
yeah,
mine.
we're big. We always use account numbers. I will not set a chart of accounts up without. And there are best practices on how you number accounts. But from the expense side of it, on your P&L, you want to be able to really isolate your payroll expenses, right? And how are you going to categorize those on the P&L? We group those together. So in your payroll expenses, you need to know how much you're paying yourself as an owner, your
Mhm.
staff, your attorneys, okay? And then we also have to account for any health insurance stuff and 401k stuff. So that has to all be grouped together correctly. And when I get new clients and those things are all over the place. Oh, and I'll tell you another thing we see. Payroll is always recorded wrong. Okay? Payroll payroll they take whatever ADP withdrew for what they call wages and what they call
Yep.
taxes as wages and taxes. That's not true. Wages are the wages, the $10,000, not the $8,000 that was the direct deposit. Okay.
Right.
So anyway, that's a huge pet peeve of mine too. But back on the P&L, categorizing your chart of accounts, so you want to have your marketing properly categorized, and we create sub accounts for these, right? And then we
Mhm.
have office expenses, and then we have I'm drawing a blank. Office supplies, software, services, breaking those out. Yeah, we like to group them together so that you have like a top tier and then sub accounts underneath it.
Well, and that's something that we agree with you on. If your chart of accounts has too many lines on it, you're never going to see what it's trying to tell you.
Right. Yeah.
So being able to roll it up, being able to look at fewer
Yeah.
lines so that you're just looking at major categories
Yeah.
makes it much more useful. You can always drill down and get the information you need if you need some
Yeah.
kind of detail, but but when you're really analyzing your financials, you're looking at trends, you're looking at the bigger numbers, you're looking at what's working and what's not working, and then you can drill down into it. But if you
Yeah.
start at that drill down level, you just don't see anything.
No. And the other thing is a vendor is not a chart of accounts.
No.
So we have a lot of people that create a chart of account number for each vendor. It's like, oh my gosh, please don't do that.
No,
Um,
no, 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 no,
yeah,
no. I did
Clio
have
is not a chart of
somebody,
account. It's a vendor.
We were talking about the cash flow forecast one time, and I had someone that was telling our clients that every vendor got a line on the cash flow forecast, and and your P&L should match, and I'm like, wrong. We're just
Yeah.
going with wrong. That is, it's too much information. It makes the rest of it completely not
Yeah.
useful. So
Yeah. The cash flow report's a tool. The cash flow report is not your financial reports.
it's not.
Okay. The cash flow is a work in progress. It's a tool. It evolves, it changes, it massages, and it's a lot of
And it's
things.
forward looking, right?
Yeah. Yeah.
It's like, it's a projection, and your projections are never going to be 100% spot on. And if they are, then I'm going to tell you that somebody's spending way too much time managing that.
Yeah.
And so, yeah. Okay.
So that's on the chart of accounts. Why that's important is because it has to tell the story of your business, right? And
Mhm.
then you can go through there. The other thing that we talked a little bit about is when we're looking at a new client, what message we see
Yeah.
is those client advance costs, making
Mhm.
sure that they've been recorded consistently and make sure we're accounting for them properly for tax purposes, right?
Yeah.
A lot of that. The other thing, and I know you'll appreciate this, is when I look in there, the first thing we'll do is run a P&L by month, and I look at the income, right? The
Mhm.
inconsistent income is something I really hone in on, where they've got ups and downs and ups and downs and ups and downs, because it's an opportunity for us and for your guys' team to go in there and say, what's going on with this income? Like, it's a roller coaster ride. Why can't we see a nice, even or more even flow of income?
Yeah.
So that's something that we look at
And
too.
that's probably, Peggy, when you walk in and say, we're going to do billing twice a month. And
Yes.
that
Yeah.
probably eliminates, because I know attorneys that are like, yeah, I haven't billed in 6 weeks. I'm like,
Yeah.
please, can we just bill out it? Like,
Yeah. It's
and
crazy.
you do that for people. Like, you actually will do their billing.
We do their billing. We send the bills out. We make sure we do follow-up phone calls. We do follow-up emails. You guys, AR is one of my pet peeves. You guys should not have the AR that you have. And if you've really got old AR, just get rid of it because it's annoying to look at. It's not real money. It's fake money. So why look at it? And it really, if you get in that habit early on and you're making sure that you're looking 30, 60, 90 days out on your AR, that 90-day column, that's your stopgap. Okay. It should never flow into 120,
Yeah. Because
right?
at that point, statistically, you're only going to collect about 10% of it.
Yeah. So it's a problem child already.
And if
Yeah.
it's sitting on your balance sheet like that, all it's doing is taunting you and making you feel like a failure. So, like, let's get it off
Yeah.
and move on.
Here, I'll tell you something else. Now, Clio has this really cool new feature that does auto reminders for outstanding balances. Like, you can
Oh,
set it to send it every 15 days, right? Or
that's
whatever you
nice.
prefer. It's something I warn people about that is it's not a phone call. Okay. They're going to ignore those emails. There's nothing, their habits are not going to change just because you're sending that more frequently. You still have to make the phone call.
Yeah,
Yeah.
absolutely.
So,
All right. We are running low on time.
okay.
So here's what I want to talk. Here's what I would like for you to do.
Okay.
We talked in the beginning a little bit about, like, on your bio, what your firm does. And we've talked about some of it here. Like, you'll do trust reconciliations, you'll clean up their chart of accounts, you do billing. But can you kind of like wrap up, like, just in a neat little package, what is it that you do for law firms?
So we'll start with that conversation as thinking about us as your outsourced bookkeeper. I mean, we are really part of your firm. We are an extension of your firm, and we become your go-to person for everything you have related to. So when we go in and we start a bookkeeping project with a law firm to take them on as a new client, we really focus on, we just don't do things at the end of the month. We are in there every week doing things. So we are your eyes on your business, making sure that QuickBooks is kept current, it's up to date, things are categorized correctly. So at the end of the month, when it's ready to do your financial reporting, which is what we do, everything's kind of in place already, right?
Mhm.
So our services include getting set up so that we can be doing your QuickBooks work. Now, majority of our clients are Clio clients. So
Mhm.
we're looking both at Clio and QuickBooks, making sure all the data has come over correctly. We're actually the ones recording everything in QuickBooks for them, okay? And then on a weekly, we do a number of weekly cash flows for our clients, which I know you guys are big fans of, just to
Yeah.
make sure that they can see what's going on. So we do the weekly cash flows reports. And then at the end of the month, we're actually performing the official reconciliations to the bank statements for all the credit cards and the bank accounts. And we're doing that trust three-way match. Now, the thing with the trust three-way match, we have a really unique process in place between Clio and QuickBooks on how we map the data over,
Mhm.
so that we know when something's out of whack right away. So during the week, we're not going to wait till the end of the month to identify a problem with the trust transactions. We'll know it in that week. We're going to
That's
say, hey,
awesome.
it looks like you moved $500 to pay this invoice in Clio, but yet we didn't do it at the bank. All
Yeah.
right, so you got to move $500, and by the way, don't have people do that because it's really annoying transferring trust monies randomly through the week. That's why we have a process for that. And then we like to schedule a quick 15-minute call with our clients after we send the reports, just to go over them and make sure they don't have any questions. One of the reports that we really like sending is the expense detail. So
Mhm.
every month we'll send that even before we finish the reconciliations, so that they can start looking it over while working on things.
Mhm.
Okay, it gives them an idea a chance to look at their expenses for the month and actually see where they spent money. And
Yeah.
some of them are like, oh shit, I didn't know I spent money on that, or I meant to cancel that, or something like that.
Yeah.
So yeah. So that and then at the end of the year, we're there to work with their accountants, send the reports, be a sounding board between them and their accountants, because they don't like talking to their accountants all the time.
Awesome. All right. So there's one more thing that your firm does that I know about. I'm sure there are 1,000. Like for instance, I didn't know that you guys would do follow-up calls with clients about bills, unpaid bills.
Yeah,
That's huge.
yeah.
Um, but it's something that you and Chris do that's outside of accounting, but 100% within your Clio expertise, that you guys will build workflows for people.
Yeah, well, we take Clio's tasks are not one of my favorite things, right? But we'll work within Clio to help build out workflows. But what we really do more importantly on that side of it is really dig into what their processes are and see what can really be automated and what makes sense. Okay, because sometimes I find with the tasks, you got a task list that has 40 steps in it. That is the most unuseful task list ever. Okay. It's just not going to get used. So, really honing in on what you guys need to get done for a particular steps. I'm a huge fan of legal boards. Have you heard about legal boards?
Oh, what's legal boards?
Legal boards
See, every time I talk to you, I learn so much.
is a cannon board style of tasks, but it integrates beautifully with Clio. So you act, and those guys, Raphael's the owner of the company.
See, again, you know everybody.
He'll take a workflow. We've done a couple with him on estate planning and on real estate closings, were some
Mhm.
big ones we did. And the tasks get created in legal boards where the workflow and the triggers are all set up. You can build triggers that you can't build in Clio, right?
Mhm.
Um, and then it takes those tasks and it actually puts them inside of Clio so they're there. But the integration is really like when you're inside of Clio, you can click a button that says "Take me to legal boards"
Yeah.
right from that matter, and it'll take you into legal boards where you can visually see the matters, the tasks. I love the product.
Okay. I think we need a whole nother Facebook Live about workflows. Would you
Yeah,
do one?
yeah,
Do that?
yeah. That's a great one because that is where they're going to save time, right? And things aren't going to throw. I have to use them for my own business. I mean, at the rate that we're taking on new clients now, if I don't have that workflow set up well, something's going to fall through the cracks, right?
That's
And we try to avoid that. So, legal boards is probably one of my favorites.
awesome. Okay, Peggy. So if there is someone who has pulled their P&L and it's 42,000 lines long and all alphabetical, or if they've looked at their balance sheet and their trust bank account doesn't match their trust liability, or if they just think that they're doing this themselves or their bookkeeper's not any good and they think they need to call you or get in touch with you, how do they do that?
The best place to reach me is via email. I'll be quite, because phone calls are hard for me to take during the day. So I'll be quite frank. The email tends to be the best way. And besides, I got somebody else monitoring my emails that can help do the follow up too, right?
So it gets addressed quickly.
Yeah, and I seek to help. I am one of those people that I seek to help first. So when I get inquiries from small firms that have questions about things, I really kind of like to get them something to help them right away. Like, hey, have you tried looking at this? I think this might be your problem. And then, then we can build a relationship that way as well. But email's the best way. You can find me on our website, cpn-legal.com. We have, we're in Cincinnati. We have 11 staff now, accountants. We have accountants on staff and senior bookkeepers. They all work. Nobody works virtually. Nobody is a contractor. They are all employees of CPN Legal, which is something Chris and I are adamant about as well.
You are adamant about that, because I had somebody at one point that would have been really great for your team, but they had to be virtual because they weren't moving to Cincinnati. You're like, absolutely not. I want to see them. I want to watch them work. I want to be able to intervene, which is
we deal with a lot of sensitive data. I mean, there's a lot going on, and Chris and I both feel better when we can be walking down the hallway and saying, how's it going? What are you stuck on today? Things like that. So, yeah.
All right. So once again, your email is peggy@cpn-legal.com. And cpn-legal.com is your website. And there's more information there. And if somebody can't remember that, you can always email me, brooke@cathcap.com. So I really appreciate this.
Thank you. I enjoyed it. I appreciate it. I like this. I like the format.
People come on, they're like, I don't know. And like, do I need a presentation? I'm like, oh no, we're just going to chat. And we're going to talk about things that you think are interesting and that I think are interesting and that we both think would be interesting for law firms.
Help them out. No.
Awesome. Well, thanks so much for coming on.
All right. Talk to you later.
All right. Bye.
Bye-bye.